Well, hello everyone. K Kim here from the Traders Club, and hope you guys are enjoying your evening. I'm just going to mute my phone before I get this video going there. So tonight, as I promised, I was gonna put out these midweek update on a weekly basis, and obviously every other week we'll do this static recorded video like this. And next week, what we're gonna do actually, oh man, I just realized next week. Usually next week we will do live midweek update. You can come to our webinar platform and you can hear me live. You can ask me questions and things like that. So, what we do is we'll do like bi-weekly basis. We'll do static video like this on Wednesday, and then next Wednesday we'll do live sessions. So we're gonna do that every other week in that way. 1 week static video, 1 week live. But next week I actually not going to be able to do that. But you're feel free to sign up for that live midweek update that I'm going to do on a bi-weekly basis there every 2 weeks. And you can always follow my blog at twotradersclub.com and sign up for the alerts there. So when I put out these videos, you're welcome to check these videos out. And what I like to do is just kind of give you guys a little insight of what I think the equity market is doing. So tonight what we're going to do is we're going to look at these ticker symbols here: Spider, Nasdaq, Russell, Dow Jones, and the last we'll look at the financial sector. I do like to look at financial sector like one of the equity indexes. I really like to see financial looking strong, confirming the S&P 500's move. So we'll look at those and see possibly forecast what might be happening next few days, maybe next week or two, and then talk about potential level of support and pivot level to watch, and if it falls, what level should we watch, and things like that. So we're going to do that, and then if we have time, I'm not sure, but we'll look at some of my current positions. I picked out some of these here. The treasury bond's been doing great. We've been heavily involved since late March, and we're holding our full positions, doing very, very well. Tesla, will talk about Amazon, Visa, Jazz, FSLR, and maybe Google there. So let's get to it here. Looking at Spider, and I want to start with this chart right here. You can see the big picture. This is actually a daily chart going back to November 2012. You can see we had this this kind of channel action going on there. You can see that how well it has been respected. This rising channel level here, we've been grinding here for a while. You can see that how maybe a few months here before it actually fell down, and then we found support right on that 100 SMA, which we anticipated that we possibly will find some support because of the fact that it did find support. And the 100 SMA does have pretty impressive resume. You can see how many times we get to that level and we find some support there. So when this thing fell down, we realize, hey, that's the level. There's a potential level of support, and we want to see some evidence of that happening. And we start seeing that, and then we had a little bit of bull flag going on there after gap. The gap held and sustained, and then we had a pretty much V-shaped move thereafter. So as soon as we got above 50 MA, we realized we were going to see some kind of turbulence, and we saw that. You can see that this thing got up and came down, and then isn't that interesting that it came down right onto that 50 EMA. 50 EMA is this the daily 50 moving average, exponential moving average here, the dotted pink line right here. And we were looking at that because, hey, last time we got above 50 MA. You can see that right here. We made a little bit of move, and then we came down. We hit that level, that 50 MA, and then we started bouncing off of that. So hey, we thought this time around we might see something similar. So we got up and we came down, and we hit that 50 MA yet again. Isn't that interesting that these things continue to happen here? So, and then the bulls came back and brought it back up here. And I thought maybe we're gonna have a couple more days of that kind of thing happening here, something like this. We didn't. We gapped up. We sustained this gap, and then we continue higher. In the last few weeks, we continue to see bullish run here. So the big question is, what's going to happen next, right? That's always a big question. Are we going to just roll over? That's what bears want to see. Or are we going to maybe consolidate for a little bit before continuing higher to check this resistance level? Or maybe we're going to see a pullback, right? Pullback to this level and possibly retesting that level as new support, right? Or resistance becomes new support. And many times what you can do to possibly forecast what possibly could happen next week or so is just kind of looking at the behavior. See how S&P 500 handles certain situation like this. And so if we go back and just kind of observe recent action here, let's just say, hey, after a little bit of like very short term decline, let's just call it a short term correction. You can call it a little bit of decline. After the decline, we V-shaped higher, and we get a run, right? We get some kind of run, and then what does happen after you get a run like that, right? So let's just kind of look at here, and what I want to see, maybe we can kind of observe, we can try to see from 2012 November, right? So we had a little bit of correction, we got up, we pulled back, and then we had a pretty nice bullish run here. And then what happened was, and just observing what happened there, we started really grinding that 10 EMA and really following that 10 EMA, right? 10 EMA acting as support continually until that 10 EMA broke. We saw volatility, and then what do we see? We saw that 50 EMA coming again and acting as support. We got up. We had a little bit of a confluence there, and then again 50 MA acting as support. We got up again, came down. 50 MA yet again acting as support, right? And then this was more like a channeling action here. We saw it's more like a channel price action. So let's skip that because we don't know if we're channeling here. I mean, what we're talking about is that we do have this long-term channel, but this was more like a shorter-term channel going on there. More like a this was more like a textbook channel going on there. So, and after that, we had a decline. We got up, and then we started kind of riding that 10 EMA again, and we're starting to see like a little bit of hesitation and start moving sideways and bit of sell-off, but we continue to ride that 10 EMA there. And then when we did pull back, we hit that 50 EMA, right? Same thing here. We continue. Isn't that interesting? This thing continued to happen again and again. We continue to ride that 50 MA. Once we lost that 50 MA, the volatility showed up, and then we lost that 10 MA, came to 50 MA. We had an initial bounce. We both tried it again at 50 MA here, but then we came down. At that point, we bounced at that 100 SMA or nearby 100 SMA there. And then we got up, and then we bounced 50, 50, 50, and then we rolled that 10 EMA, 10 EMA, 10 EMA, 10 EMA. You can see that. Well, I don't have 20 EMA here. Let me actually put 20 EMA, then you will see that that's where it actually started bouncing off of. Right there. So that little light blue, you can see that how it's been bouncing off of that for a while. This is what I'm talking about, is that when the bulls are get going, we don't know how long it's going to like grind and start to consolidate like this. And this time we did what, June, nearly 2 months. Can you imagine 2 months we just moving up and down, up and down, up and down, up and down. Finally we came down, but that was short-lived, and then we got up. So we just observed, we just studied really quick the price action of the past, and that's important. That's important because what we're trying to do is we're trying to analyze, we're trying to find out the condition, how when certain thing happens, how does S&P 500 react to that, right? So we just what we just analyzed was, hey, when we had a little bit of correction, a little bit of decline, and when we got the bullish move, and we got to a certain level, and then we start to see what? We start to see a bit of sideways move, maybe some up and down, some volatility, but what we keep seeing was that 10 and 20 MA continue to act as support. When we break below that level, that's a lot of times that when it comes that 50 MA becomes handy, and then 50 MA act as support, and maybe we do another bullish run, and then finally when 50 MA gets broken or it breaks below that, then really next time is 100 SMA there. The thing about this, what we just described, right? That riding that 10 MA, riding that 20 MA, and that breaks, and the 50 MA acting as support, and then possibly a bounce, and then ride a little bit, and then 50 MA breaks and comes to 100 SMA, and then it finds a bounce 100 SMA and goes back up and do it again. It repeats that same cycle. It may not look exactly the same, it might not does exactly the same way like it did before, but it does in a similar way. Don't you agree with that? Don't you agree with me on that, right? We just looked at that and how it was continually doing that. And this is what I mean by following the trend, right? Everybody likes to talk about how to follow the trend. Trend is your friend, right? But it seems like not everyone understands how to truly play that or execute that in our advantage. So this is what I do. The thing about it is nobody truly knows how long it's going to repeat that, right? How long is it going to do this? And then this makes bears go crazy because, oh my goodness, again? You want to do this again, and that's what it's doing. That's what it's doing. And at this point, again, the word I like to use is a benefit of doubt, right? Benefit of doubt does continue to go to the buyers because of the fact that we're continuing to see the same thing happening over and over again. So let's zoom in here a little bit. And so what I have to say is, hey, even if this thing pulls back, where is next likely level that it was going to find support? What do we just start keep seeing after this kind of run? It was the 10 EMA, right? It comes and then it grinds on the 10 and follows the 10. When that level, when we lose that level, what happens? Well, 20 EMA could act as support because look at 20, 20, 20. I mean, there's few instances where we got below this, but look at every time bulls will just bring it back up. And they did this for about 2 months. So definitely this is not the level to short unless you're like day trading. What I mean by is like 30-minute trading, right? Because hey, we don't know how long it's gonna do this. Something that I've been talking a lot about is that this market isn't just gonna do this after this kind of bullish run, right? This is good news for the long-term investor. Is that this ain't gonna just do this one day and then just fall like that. Unless this huge alien ship comes into New York and just like this alien ship here, and then there's a laser comes out and then just kills everybody, right? Unless we see that happening, that ain't gonna happen. So what's gonna happen if this market is gonna actually tank? We're actually gonna have a steep, true correctional move. Well, we're gonna see some topping pattern. We talked about it on our last few videos, and you can go check that out. But topping pattern, maybe some kind of a triple top or much bigger head and shoulders. But what we need to see is a lower high on the indices, and every single indices that we're going to look at today, Spider, NASDAQ, Russell, Dow Jones, and financial, they do not have lower high. I'm talking in primary term. Now, I'm not talking about, minor term in a minute. I'm talking in primary term. Lower high meaning, higher high, higher low, obviously, right? For lower high to be established, we need first to see either equal lows or lower low, and then when it bounces from that lower low or equal low, it's gonna create that lower high, and it needs to confirm by creating lower low, right? So then when we get higher, we've got highs, lower high, lower low, and confirms low, another low. That's when we get a huge warning signal and say, hey, this market is in a danger formation. We're going to have a steep correctional move. And then at that point, we can look at other signals to confirm and affirm that. But right now, do we have anything of that? So as far as a pure price action concerned, I'm not looking at these overlay charts. I'm not looking at 1925. I'm not looking at, the MACD signals or nothing like that. What I'm looking at is just pure price action. Looking at this pure price action itself, it's very difficult to say that we're going to see a huge market crash. That crash might be coming. Again, if you ask me when, I think next year. Maybe late spring, early summer, but I'm just guessing. I don't know. But for the fact that we have not yet seen any kind of lower high, any kind of topping formation, and we continue to see this trend repeating, right? I would have to continue to give benefit of doubt to the buyer. So, if I had to forecast short term, we are seeing a little bit of a, this is kind of a getting tired indication. Does not mean that this market is going to roll over. So I think next level to watch is basically this level. If it does fall back, this is all resistance, possibly could act as support. That's the same level that is coinciding with the 10 EMA. So we could come back down, hit that level, and we have to understand if that level, we have to figure out if that level actually becomes support and bounces from that. Because, that level could break, and then next level will be 20, and then I think likely 50 EMA could act as strong support, because 50 EMA does have a pretty impressive resume. Looking at this here and last time right here too. So, but I think intermediate, for minor, the next few days, definitely about 198.63 is a definite level to watch. If this thing does gap down tomorrow or something like that, that could be a little bit of problem because that could be, you can see that gap up, gap down. This could be an island top, and that could give bears a little bit more push. In that case, there could be a good chance that it might want to come down to maybe 20, 50 MA. But if we start just grinding lower, right, grinding low, there's a good chance that it's gonna hit that 10 MA and then just bounce right back up. There's another good chance that this could become maybe a potential bull pennant. We don't know that yet until it breaks out. This was a bull flag, you see that, and this could be a little bull pennant, and then just get to about 202 here. And just because we get to a resistance level does not mean that it's gonna just roll over. Because last time we got to resistance level, what did it do? What did it do? It grinded on that level, and then we started zigzagging for about 2 months. And again, for that, in that 2 months, a lot of things happened. There are a lot of trade setups that you could have done. There are a lot of potential bullish moves on some of the equities. So that's the thing about it, is as long as S&P 500, this market continue to illuminate and create bullish environment, individual equities will tend to do pretty well, despite the fact that we might get just volatility within few days or so, because the market is gonna have its fluctuations. So that's why it is imperative that, depending on your time frame, I don't know if you're a day trader. If you're a day trader, hey, forget about what I was saying about the trend is primary trend. But if you wanting to be more like my set style, where I like to longer term swing trade, what I mean longer term swing trade, maybe a couple of weeks to a month, or position trade. I've been implementing a lot of position trading this year, which means I'm gonna get into position to hold about 6 months, some of them maybe to a year, right? And for you to be able to do that, you really have to look at a big picture, able to understand the major topping signals or major bottoming signals or continuation patterns, which I've just described to you of this how this S&P 500 trend is so strong. Because you can see that we continue to develop, we continue to create and cultivate higher lows and higher highs in a primary term, right? So as long as we do that, benefit Dow continues to go to the buyers. Nobody knows how long it's going to continue. We can do this for the rest of this year. I think that's what it's going to do, even early next year, right? Nobody knows. So as long as the market is going to continue to do this, we would have to continue to look at this market as a bullish bull market, and we have to react accordingly, or preserve our positions, or adjust, reposition, according to the trend, especially if you're long the equities. So looking at the S&P 500 here, like I said, it does look like it's getting a bit higher. I wouldn't be surprised to see a pullback a little bit, and if it does, watch for the 10 EMA there, and watch for the 198.35-ish as acting as a new support. Or if we break out of this little bull pennant looking like 3 days of possible consolidation for another thrust. If that happens, then watch for that resistance level. They're coming about 202.81-ish. Doesn't mean it's going to roll over. You might just continue grinding that, and then maybe pull back and wait for 10 and 20 EMA to come by, and then just kind of support this move continuing. And all we know is we can stay here for several months before another pullback, and then just keep repeating this, right? So I would have to continue to give benefit out to the buyers there. Let's look at NASDAQ. I just spent 18 minutes just explaining that on S&P 500. So I'll look at these NASDAQ pretty quickly here. NASDAQ looking so strong. After this kind of cultivation from the bears, their dreams has been shattered. Bears worked so hard to put this thing together. Bulls stole it from them. And since then, bears just completely got crushed. Their spirits are crushed. They just don't know what to do with it. Maybe potential head and shoulders, but nothing happened. As soon as we got above 10 EMA, boom, nothing there. So we continue to make new highs. Again, it does look like it's getting a bit higher, maybe a pullback. Maybe once we test this level as all resistance and support. But watch 10 EMA, 20 EMA. You can see went up, came down, and look at this. How long the 10 EMA acted as 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trading days. It acted support, and then we got up, and then when that failed, watch 20 EMA, it acted support. Isn't that interesting? 10 EMA, 20 EMA, and then when that broke, well, where did it find bounce? Isn't that interesting? Is that 50 EMA? Oh my goodness, it's like clockwork. It's clock, isn't it? That's very, very interesting. 10 EMA, and then 20 EMA, and then 50 EMA. So that same rule here. All right. So when we does pull back, those are the levels to watch. Those are levels that potentially we could find some support there. Looking at Russell here, Russell. That's the thing about it, Russell. Is one thing that I noticed was that, hey, when we get above 50 MA after pullback, we get a bullish run, right? So what we saw was, hey, it came down, but when we reclaimed that 50 MA, we had a bullish run. We came down again, but we went up. We reclaimed that 50 MA right here, that pink dotted line, with a bullish run. We came down again, and yet we reclaimed that 50 MA again. And look at this, came down, 50 MA against support, and it's bouncing back up here. Some of those these levels are pretty important level, and we're standing above that level. Why this level important? 115-ish and 116. Well, because this is where the intermediate turn, we had a lower highs and lower lows going. Once we got above some of these levels, that intermediate downtrend has been nullified. Thus now we're creating intermediate uptrend. Do you see that? So look at this, it finding support, that moving averages continue supporting to the upside. So hey, even though we see a pullback, some of these levels could act as support there, and then that could be possible invert head and shoulder, something like we've seen here, here, here. So benefit of doubt continues to go to the buyers. I do think that this time around we will get above this level, possibly about 122 or 123. So I do think that we might even break above that, but we might see a little bit of a pullback there. Dow Jones, same thing, right? Look at that 200 SMA, active support here, support there, and we active support. Once we got above 50 MA, isn't that interesting? 50 MA, 50 MA, 50 MA there, 50 MA there, and then we continue higher. We have potential resistance coming. I don't know if I would really. I think this is more like it because multiple times it hit it, right? I mean, this line right here, we hit it 1 or 2. That's it. So, I mean, definitely you can watch that level, but more potent level, I would have to say this level, because look at how many times it has been respected, right? It's a pretty prominent level there. So there's a potential level that we can want to continue higher and then start grinding, right? Or start to see some volatility. But when we start to see volatility, look at 10, 20, 50 MA as a potential level of support, because that's kind of what happens here, right here. You can see that. And we see volatility, 20 MA, 20 MA, we keep grinding higher, and continue to see that 50 MA acting as support if we break that more, 10 and 20 MA there. I go through very, very quickly in financial sector. Financial, we just made new highs. The thing about this is, even if he pulls back, that's still good. Do you know why? Because higher lows, higher highs. That's what we're talking about here. So when he pulls back, a lot of times it pulls back to create a higher low. That's how higher low that's how higher low gets created, right? It gets up, creates a higher high. It comes down, but it does not come lower than this low, right? Thus creating a higher low. Goes up. When it does go up from higher low, it tends to make higher high. And then when it comes down, it creates higher low because it does not get lower than this low. And then when it goes up from that higher low, it tends to make new highs, closing above recent highs. So even if it pulls back, what's the assumption? That it's going to come down to make higher low and close above this low, right? And we don't have any signal that it's going to do that. We do have bearish dark cloud cover. Again, these candlestick analysis, they can't stand alone. It has to be, they have to have a friend coming over and then supporting that idea. So, yesterday we had a shooting star, and then we didn't have follow through today. We actually gapped up and then closed here. And so we have a bearish dark cloud cover, but if we start to see something like this, then maybe we'll continue. But hey, even though we might see a little bit of downside, this is a level to level, that's definitely a level to watch, because that level probably could act as support, because it did that last time. Look at how long we stayed here, June, all the way to end of July, 2 months. We stayed here. Very, very frustrating if anybody just want to short and really flush this thing down. But this was all resistance acting as new support. So what do we have to do now? Well, when it does pull back, we definitely have to give benefit out to the buyers above 10 and 20 MA here, because we can do the same thing. And there's no guarantee that we're gonna do this and have a pullback. We might do this a couple times and go right back up, right? So looking at all these indices, I would have to say that they're seeing some signals that they are getting tired. Does not mean that they can have another thrust, but I do think that volatility might kick in here, maybe some consolidation, maybe a little bit of pullback, but I do think that this market will continue to grind higher. You know, and if we do see some steeper pullback, 10 EMA, 20 EMA, definitely 50 EMA is level to watch, and S&P 500, see that levels watch. But next few days, I'll definitely watch 190 level, see if that can level hold, or if we break out of this little pennant there, then we can get to about 202 there. So I think the market still very much looks bullish, very, very strong. Primary trend is intact and continue to cultivate. Higher lows, higher highs in place. So benefit Dow continues to go to the buyers. We may see some pullbacks here and there, but I think the market is going to continue to go ahead. We do not have any kind of, as far as a pure price action is concerned, we do not have any kind of major toppings, you know, nothing like that. So until that gets formed, I think that this is a you know, pretty bullish. You can call it a bubble or whatever, but it's very, very bullish environment. And so I would continue to stay in that regard. So I just spent 25 minutes there, so I'm gonna go through these quickly, and I won't spend too much time. Actually, let's do a treasury bond here. Treasury bond did great, and it's been doing great, and we've been heavily involved since March, late March, right about here, about 108ish or so. And it's been great run, and obviously you can see that, you know, primary term is concerned, we do have higher lows and higher highs in tech. And that's the thing about it. The last time I think I wrote an article was on this day after this day, and I said, hey, we had a great run, we had a great move, and I said, I don't care if this thing pulls back, because I don't care about a few days of move. We've been holding heavily in this position since late March. Why do I care about a few days? But even if I was holding this position since, I don't know, like 114, I still don't care. Do you know why? Because I truly follow the trend. What I mean by that is it made a new high, right? High, higher high, low, higher low. All I care is if it can continue to make higher lows and higher highs. As long as it creates creates higher lows and higher highs, the trend is strong and it's going to continue. The market, it ain't going to just go continue. It's not going to just go straight up. The treasury bond can go straight up, but it won't go straight up until the whole equity market tanks, right? So I said, hey, I really don't care if it pulls back, because when it pulls back from this level, it is pulling back to create what? We just talked about it on the indices when I analyze it, to create higher low. It just makes sure it doesn't get below this level. As long as we're above that level, that's still a higher low. And we start seeing pullback. I said, you know what? I really don't care where it's gonna pull back to. I just want to make sure it creates higher low. And we find support there. This is actual chart I drawn that day. And then look at that, and then you start to seeing that 10 EMA acting as support right there. And then we got up and go to line chart. What do I care about? I just care about this making new highs. We just made new highs. So intermediate term, right? We have what? Higher lows and higher highs. So intermediate uptrend is still intact. Not only intermediate, minor term, intermediate term, primary term, they all look bullish there. And you're gonna draw something like this. Looks like we broke out of that. We have higher lows, higher highs intact. So I think, Treasury bond will do well. Our next target is still about, I'm still targeting 120 and or 124, filling entire gap here. Because I'm not sure if I want to close my position at 120. I gotta watch the price action at that level, see if we have a little bit more juice to push to about 120, 124 before I started closing my positions, and wait for another big pullback. But I'm not sure if it's going to do it here or it's going to do it there. I think it's going to do it somewhere over there, but I would have to see more data to see where. And then once we get to a certain level, which I think that we can possibly get to 124. If we see more weakness on the equities, maybe more to the 124. And then I'm guessing we're going to see another big drop. And then I don't know, at that point I'll have to see where. And then I would have to figure out a good level to add to our position. It could be that level, it could be here, possibly 50 MA. And then add some more, and then ultimately, there's a post there on my blog, twotradersclub.com. If you go there, I have ultimate targets in this. Ultimately, guys, I really do think that Treasury bond will do very, very well until end of the year and until next year. Ultimately, I'm targeting about 160. And you might think that, oh my goodness, 160? Are you serious? Again, we're probably not going to get to 160 this year unless this whole market just tanks. But I do think they will get there next year, maybe. But I think until then, I still, we still have some of the levels that we're watching, some of these levels, and so that's still, great targets that we're looking at, and looks great there. Again, trend is intact, and that's it looks like trend is continuing, and it is extraordinary for us to see that the bond market and the equity market pretty much moving higher together. Let me just show you something real quick. This is the chart there, and you can see that how here, let me draw something. Oh, no, not that. Get that out of there. You can see how they've been moving higher together. And we have not seen that because they go up, treasury bond go up, market comes down. Treasury bond goes up, market comes down. Treasury bond goes up, market tops, forms topping pattern, and then comes down. Well, look at this. Isn't that awesome to see? Because, well, now, because now I have a heavily position calls on the treasury bond. Also, I have a calls on the equity positions like Tesla, Amazon, Visa, and Google, and stuff like that. So they're both going higher. So that I guess that's a good luck there. But looks very good. Again, we made new highs, and I don't know if it's gonna pull back or anything like that. But I think that if equity market pulls back maybe next few days, we might get maybe a big thrust or something like that, maybe to 120, 122. But we'll see. We'll see how it plays out there. But looking great. Minor term looks great. Intermediate term looks great. Primary term looks great. The treasury bond definitely looks really, really good for much higher moves there. Again, Tesla. Tesla, so we've been in calls since about here 224ish. Went through this little bit of a consolidation pullback and then got up. I closed about 70% of my positions right about here, and still holding remaining positions. And I do still think that 290 to 300 is still ahead. If you go to line chart and really observing this price action in the past, this is an all-time high there. You can see that we came down, and then we start to gap back up here. And once we close above that all-time high, you can see we saw a pullback to right on the 10 EMA here. 10 EMA is that crap. Let me remove 20 EMA here for you guys so you can see 10 EMA a little bit more clearly. You can see the 10 EMA definitely acted as support there. This is what I'm talking about. 10 EMA, 10 EMA, 10 EMA, right? And then you can see that's the same level coinciding with the old resistance becoming the support. Well, a similar thing is happening right now. Old resistance acting as a new support, and that 10 EMA also act. Isn't that interesting that we're seeing this, right? So if we can able to get another bullish move, just one more bullish move, I don't know, tomorrow, Friday, next week, does appear to be potential bull flag here. People want to call all kinds of stuff, possibly double top here. That double top will not be confirmed until we break below 250, 230. So once it doesn't break 250, 250, 230, I will not call double top here right now. Benefit Dow continues to go to the buyers. Why? Higher lows, higher highs. And this is a little higher low there, intermediate term. So we just need one more high. And today we held up very well. Could be a bull flag. Again, that bull flag cannot stand alone. We need to break higher. So we just got to get another bullish move. We see that 290, 300. That's probably where I'm going to close most of my, probably all of my positions. I still think that ultimately, though, we can get to 330, 340. That's ultimately when I wrote my article back in mid-June. That my target price was that, but I probably myself is going to close out my positions around 290, 300 because my time is coming up here on my options there. So, okay, so I'll go through these very quickly here. Amazon, this was, like my last update, this is a definitely pivotal level that, that bulls need to reclaim and see victory over, and we definitely see that because this is a pivot level. All support, all resistance, all resistance, all resistance, all resistance, all resistance. We got above this pivot level, right? Not only that, it seems like possibly forming this higher low there, but we potentially have something going here as well. So you know, we're kind of stuck here. So we got a little bit of bullish pressure going, right? They want to push this thing up, and they got a little bit of bearish pressure here. So only time will tell how it's going to play out. But looking at the intermediate term, you can see that we have higher lows and higher highs in tech. Even if he pulls back, what you want to see, it holds 336 and then gets back up, fill this gap, maybe pull back a little bit or continue higher and then pull back. And then I do think that potential possibly can even fill this entire gap about here. I'm still targeting around this level, 390, 400. This is a long position. Got in about 225-ish right about here. So I have to say benefit out continues to go to the buyers. A little bit of complication for the fact that, you know, we potentially have a little bit of resistance. And that resistance is not fully established. But definitely level to watch. That we do have 200 something coming here, so you see how that level can act. But as long as we bulls can protect this level, I still think that bulls can push up even higher and fill entire gap there. Visa, you know, this is another thing about it. This is a level. Let's see here. This is kind of a pivot level here. It's not really a textbook. A bit of pivot level there because you can see it here, here, congestion going on here, 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 and we got above that and we start filling this gap here. We taste a little bit of rainbow. I call the gas rainbow because once you taste a rainbow, you can't stop tasting the rainbow. I think I got that from one of the TV commercial. I forgot what it was. But anyway, because a lot of times when there's a big gap like this, especially like earnings gap, once it tastes a little bit of rainbow, it wants to fill entire thing, and so that's kind of what my idea came about. But so yeah, we did taste a little bit of rainbow here, just a little bit, not much. But I think we're holding up well at the 10 EMA. So as long as we can stay above 215, 20-ish, I think we can have another bullish run there. You know. These sometimes can be a bit more volatile. So, you know, even if this thing pulls back, right, even if it gets below that, we want to make sure we continue to cultivate higher low and then in this level become support and then thrush back up there. I do think that it's going to fill entire gap here. I don't know if it's going to happen anytime soon, but I think we're holding our position patiently, and I think we'll do very well here, and intermediate term looking good here. So we've been involved with this about 212, 213 there. So Jazz. So Jazz did, you know, pretty much V-shape here, and this is a position that we went long right here, and we went through this, held through all of our positions, and I explained it, I documented it, why I held through that, what was the sign, signal that I saw. Go through my twotradesclub.com blog, and you'll see Jazz article there and talk about it, what I saw there. And we pretty much V-shaped, and so we are now we got back up here, and we had a pretty good bullish run. I do think that's getting a bit higher, but we did clear this potential resistance level. I say it's potential because it's not fully established resistance. You want to see a fully established resistance, you want to see at least 3 points. So 1 point, 2 point, 3 point. That was a bit of resistance there, but this time, you hit it once and twice. This time it didn't respect it. So it wasn't fully, so that's the level definitely we have to watch and see potentially pulls back, but it didn't. So I would have to say if we can hold this, you can also say that, hey, isn't that a resistance, Kate? Yes, that's also resistance. So if we can hold, maybe pull back, and even if it pulls back, if we can hold above 154-ish, 10, 20, 154, 155-ish, then potentially we make low, higher low, and then get back up there. My target is about 175 or 185, and I'm willing to hold through that. But looks like it's getting a bit higher. We may see a pullback, but with Jazz, with this pharmaceutical company, you never know. We could have just we could start doing something like this or something like that, and then just get another bullish run. So I guess I'll need more data for that. Very quickly for solar. Kind of a, if you go to line chart, you'll know why. Here, let me just go to line chart there, and you'll know how I drew. Like, you can see that, right? Sometimes it's hard to see when you go to candle. Go to your line chart and draw it like that. So all resistance, possibly coming to support. Interesting that we're staying right on that 50 EMA or 10 EMA there. So if we can have another bullish run from this point out, I still think that we can get up here. But it's big getting tired. This isn't such a good action for First Solar because it's known to do that and just rolls over. So it's a bit of wild card at this point. It's a bit of warning sign, but we'll see. I'm still holding my full positions here. I was involved about 66, 65 here, and if it does pull back, there's a good chance that we might find some support here, and then get back up, and you can see that could still be that higher low there. And then if we do that, and I'm targeting about 84, 82-ish. That's where I'm targeting. That's where I'll be closing most of my positions. Last one, Google does not look good because, well, first I thought it's going to be a little bit of bull flag. That didn't happen. We saw a little bit more weakness today, and we have what it looks like potential head and shoulders. And that head and shoulder doesn't get confirmed. We get below this level. So, my call position that I got involved in about 570, 569. We had a bit good run, but then, I have to see if, because I want to make sure a head and shoulder gets confirmed. Right now we have potential. So for again, I call it a potential because we have 1, 2. We just need one more point. If we can maybe bounce from that and clear above this level, then I do think that we can get to 630, 640-ish, 640-ish. My ultimate target on this is 700. I wrote an article back in late June there. So you think if we can clear some of these levels, I think we can get to some of that level there. But right now, that's definitely a threat. Bears are definitely cultivating something here, and that's a bit of a warning signal for the buyers. But looking at this intermediate term trend, we do have higher lows and higher highs, but this is not a higher high. This is a lower high. Remember when I talked about indices? I said we don't have any kind of lower highs on every single indices we watch. Well, we have lower high, at least intermediate term, on Google here. This is high, this is lower high, but we don't have a lower low yet. If we start to see that, then that's a downtrend development. We don't have it, which means benefit Dow continues to go to the buyers with a bit of a warning signal with this. So I want to see if this level gets, can able to hold this. That's the 50 MA level here. 50 MA did quite a bit of work here, so maybe that level could act as support. I'm not sure. Google tends sometimes can act like that and then just get back up. I can't see any kind of example that I want to show you, but we'll see. It's a bit of warning signal, and I would have to, if we start breaking below this level, and if we start to confirm this head and shoulder, I would have to take a loss on that one. So I'll keep an eye on it. If I see anything worthy to note, I will make sure to update my journal post there. So feel free to check that out. Last time I posted was right about here, about 595. I said we just needed one more thrust, and we didn't get that. We started rolling over here. So let's see if that 50 MA can act as support next few days. So again, hope you guys enjoy your night. And next week we're not going to do live midweek update. My best friend is flying in, and I have to pick him up, and so I'm going to be hanging out with him. So I'm not going to be doing live midweek update next week. If I have time, I'll put up a video. If not, we'll do video week after this. So feel free to sign up for that. I'll put a link right below this, right above this video, so you can sign up for that. Also, for any kind of future videos you wanna, or any kind of journal post, you feel free to sign up for the article alerts on my blog there. So hopefully this has been helpful to you guys, and hopefully if you guys are in your journey or endeavor to understand the trend and want to be more of a longer term trading or longer term trader, you feel free to keep in touch with me, see if I can help you in any way. So we'll have a great night, and we'll talk soon.